QuickBooks Online 2025, entering the bill form, increasing accounts payable. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. We are online in our browser searching for that QuickBooks Online test drive, the free sample file available to everybody looking for a result that has intuit.com in the URL. That giving us a little bit of assurance that we're in the right place, given the fact that Intuit is the owner of QuickBooks. You might have to then verify that you're not a robot, and then we should be in our sample company file, Craig's Design and Landscaping. Let's open up the major financial statement reports, which will be the routine we do every time. The reports on the left-hand side. We're in the Standards tab. We're going to open up the favorites, the balance sheet, right-clicking on it so we can open it in a new tab. Right-clicking on the profit and loss, otherwise known as the income statement, to open it in a new tab. We should then have 3 tabs up top. I'm going to go to the one in the middle. That's the one with the balance sheet, closing up the hamburger. The data is currently in 2024. Intuit might update this sample file to put the data into 2025. What I'd like to do at this point in time is have 2 months or 2 years side by side, 2024 and 2025, so I can drill down on the data that's already been constructed in 2024, entering the new data into 2025 as we do our practice problems. So I'm going to change the range then from 010124 to 123125. So it spans 2 years, and then I'm going to select the drop down here. And I would like to see years then. That's going to break it out by years. Then we're going to run it, and it should change things up. So now we've got the 2024 and the 2025. Notice that the numbers are the same because the balance sheet is as of a point in time and no data was entered into the system after 2024. But we're going to enter some data in 2025. If I drill down then on the data for 2024, we can then get to the transaction detail showing us basically a general ledger. And now I'm going to go back to the report. Let's do the same thing for the tab to the right, which is the profit and loss or income statement, closing up the hamburger, changing the range from 010124, 123125. I'm going to make this for years, side by side, run the report. So now we've got the report for the income statement. Activity in 2024, nothing's happening in 2025, which gives us a nice clean look as we enter data into 2025. All right, that's the setup process we'll do every time. Let's go back to the first tab now, which was where we're going to do our data input. So in prior presentations, we talked about the general accounting cycle happening on a yearly basis, and then you could break it down to a quarterly basis or a monthly basis, but then we want to break it further down into cycles. And we saw that if I hit the plus button, we have it broken down by forms under the category heading of the cycle: customer cycle, vendor cycle, payroll, in essence here. We're looking at the vendor cycle. Vendor being a particular term for Intuit, for QuickBooks, meaning it's not just someone that sells stuff, it's someone that we buy stuff from. We are vendors from a normal parlance terms because we sell landscaping. But in the case of QuickBooks, we have to determine which side of the table the terms are talking about. In this case, the vendor means we're buying from somebody. That means that cash is ultimately typically going to go out for the purchase of goods and services that we're using in order to help generate revenue, which will be the fact that we're going to get expenses then, or an asset like property, plant, and equipment. Now, if we paid just cash for it, then we would have a check form, but now check forms are kind of antiquated. Everybody does electronic transfers. So you have an expense form, which is basically a check form without the check number. These two forms are the forms that decrease the checking account. If you have a nice, easy system, which many businesses do, on the expenses side of things, if you're not tracking accounts payable, because you don't really need to, you're just paying the expenses as they come due, whether you pay them with cash or credit card, both of which can be connected to the bank feeds, you can just connect them to the bank feeds possibly and construct that part of your accounting system with an automated process of the bank feeds. However, If you have the accounts payable, as we discussed in prior presentations, often for larger businesses that want to have a more strict time value of money and cash flow with regards to the outflow of money for, say, accounts payable, then we're going to have the bills that we have to track. Now, I have to keep harping on this idea of the terminology because it becomes really important. People don't know what we see this in the current culture these days. People are using terms that don't mean what they used to mean. People are redefining things all the time, and that just naturally happens with language. But the point is, we want to be as specific as possible because we actually want the other person to know what we're talking about, right? So the terms here are going to be important, of course. So when we talk about a bill, remember that the bill could mean that the telephone company, for example, is giving us a bill, possibly in an email or in the mail. Or it could mean that we're billing the client for, in our case, the landscaping services that we're doing. However, in Intuit, the bill means that we're purchasing something and we're not paying cash for it yet. We're going to pay cash for it later. And then the invoice is when we bill the client. So when we bill the client, we call it an invoice. So we might get something from like the telephone company that we need to pay that's actually called an invoice. Why? Because if the telephone company is using QuickBooks, it's going to be called an invoice. But to us, we think of it as basically a bill that we're going to have to pay, just in normal parlance language. And then when we enter it into the system, note that we might not enter it in as a bill because we might enter it simply as an expense form. In other words, when they send me the electronic bill for the telephone company, I might just say, hey, look, just automatically pay it and then wait till it clears the bank feeds, and then I'll record it with an expense form. I will never enter the bill into the system as a bill. I'm going to enter it as an expense form, or I might actually write a physical check instead of entering it as a bill. That's what a lot of small businesses will basically do. If I enter it in the system as a bill, the bill more specifically here means a form. All of these are forms that we're looking at in here. And that doesn't mean necessarily that we're going to give the bill to anybody or print it out. That means that it's a data input form. It's a data input form that will record a transaction in accordance with the double entry accounting system, at least 2 accounts being impacted. So that's what this bill basically means. What's the account that's going to be affected? It's going to be accounts payable. So when you think bill, you think accounts payable is going up. Accounts payable is the account that means that we owe people money. So let's go to the balance sheet and just take a look at that. So where could we find the bills that are going to be entered? They're going to be under the accounts payable. That's a liability account. So if I scroll down to the liabilities down here, we have the accounts payable. If I drill down from the end product into the source document, I can drill down on the 2024 numbers because that's where they currently are located. And you can see that all the transactions give me the form type. I can see what is happening just by the form type. That's the beauty of it, because I can say, hey, it's a bill. That means accounts payable went up. And I can see this is a bill payment. That means accounts payable went down and we paid it with basically, in essence, a check. Notice that accounts payable, like most accounts, only has a couple forms that impact it. In this case, only bills and bill payments, right? We have it go up with a bill, we decrease it with the bill payment. The one account that is not that way, the one account that has a whole mess of transaction types within it, is cash. Why? Because cash is the lifeblood of the company. It's included in every it's like the veins of the company. It's like the lifeblood is going to all cycles of the company. Every other account, for the most part, is going to serve a particular purpose. This purpose tracking the accrual account, because this is an accrual account, it's not a cash-based account, of accounts payable, tracking who we owe the money to. Now, if I drill down on a particular bill form, we can see what one looks like. So we've got our bill form. I'm going to close this out. We've got the vendor. That's who we're going to owe the money to. We haven't yet paid the money because it is a bill form. The rest of it looks very similar to a check form or expense form, except for the fact that instead of the asset going down of cash, we have a liability going up of accounts payable. In other words, we have the terms of the bill, when we're going to pay it. We've got the bill date, we've got the due date. The due date's going to be the important date for us because that's going to be the date that we have to sort the bills by to make sure that we pay before that day so we're not delinquent. So note what happens is we're going to record the actual bill when we enter the bill into the system typically, which will record the expense at that point in time as well. But the due date will be very vital because that's what's going to tell us when the bill is due, and that'll help us to sort the data. Down below, we've got the categories. Notice there's two kind of category sections down here. We've got the category detail and then the item details. So normally for most bills, we're going to have category detail, which means we're just going to assign it to an account. If it was a telephone bill, we'll put it into the telephone expense. If it was gas and electric in this case, we put it into the basic gas and electric, assigned it to an account. That will then post it to the financial statements, increase in accounts payable. The other side go into the utilities. What is this one down here then? This is an item detail. Items is the QuickBooks terminology basically for inventory items, the things that we sell, whether they be service items like landscaping services or inventory items that we are selling. Notice that the bill means that we're not selling it here, we're purchasing it. So that would mean the item would be specific to inventory. Why do I have to have a separate account for the items? Why can't I just put it into a account category of inventory? Because the items have an added detail that we want to have tracking the subledger, and we'll talk more about that when we get to inventory, meaning we want to track the units of inventory in the system. And if we're using a perpetual inventory system, tracking the inventory within QuickBooks, we would need to use the items and set them up, and we'll see a lot more how to set them up in future presentations. And then we've got the memo down here. We can add attachments. This could be useful in the event that basically you want to put the actual invoice or attach it in here, because that might be something that would be useful, say, to the accountant. So notice the fact that we're going to be paying things out of the checking account and we're entering it into QuickBooks and so on gives us somewhat of an audit trail. So we kind of have an audit trail, but sometimes it's useful to have the attachment anyways in the event of an audit, like from the IRS or something like that. And sometimes we might want the added detail to give to the tax preparer, such as for if we buy property, plant, and equipment. If I buy property, plant, and equipment, I want to possibly attach the item here to tell my tax preparer all of the information related to that purchase of property, plant, and equipment so they can put it on the subledger for depreciation. And then we've got the cancel down below. We can print it if we need to. Typically, these bill forms we don't need to print because these are not the invoices. We're not invoicing the client. It's a data input form, a bill form for our internal purposes to record the transactions. We can make it reoccurring. We have another course or section on reoccurring transactions, I believe, meaning you can automate transactions and make them reoccurring. And then you have the more category. You could copy it if it's a complex one, delete it, copy to vendor, the transaction journal, and the audit history information. We can save it, and then we can save and new or save and close over here. So let's go back up. I'm going to close this back out, and let's go back up top to our, notice I'm not going to this back arrow. I'm using the ones internal to QuickBooks, back to the transaction. And so now we're back to our balance sheet. All right, let's just take a look at the journal entry. I'm going to do this in a transparent way in Excel, just so we see like the accounts that are affected, so we see the double entry accounting system, and then we'll enter a couple bills into the system, seeing how that works. So I'm going to go over here to Excel just to show you if I enter a bill, what basically is going to happen. Normally, if it was a telephone bill, I'm just going to choose the generic account of expenses, which is on the income statement. Let's say it was for $75. And then the other side is going to go to, not cash is going down, but rather it's going to be accounts payable. So I had the utility bill. We're going to imagine I'm going to put the credits as negatives because that just makes it a little bit easier to record. And so I'm just going to say, all right, expenses went up. So that's going to be down here in our income statement. So this is a trial balance. This puts basically the balance sheet on top of the income statement, but it's in a more transparent way just so you can see what's going on and how the double entry accounting system kind of works, right? And then the accounts payable is going to be here. So the liability went up, accounts payable went up. That's going to be on the balance sheet. And the expenses went up, which is going to bring net income down. There's no income right now, so net income would be income minus expenses, and then that's going to bring the net income down. So that's the typical type of journal entry you will have with a bill. Now we have the added problem of a bill in that now we have this liability that if I just paid it with cash, I'd be done. No problem. I'm done. It's over. But now it's not done because I haven't paid it. So at some future point, I'm going to have to take it out of accounts payable and pay it with cash. So I'll decrease the accounts payable and decrease cash, which we'll talk about next time. That means I'm going to have to track the accounts payable by not date, but vendor, who we owe the money to, so that I can pay them at some future point in time. The game being that I try to pay them as late as possible without getting penalized or pissing off the vendor, because that's the cash flow game of accounts payable. We want to have the time value money, hold on to it as long as possible. All right, let's actually enter a couple. Let's go to the first tab. We can find the bills in a couple different areas, but the easiest way to find them is in the plus button here, and we can go into the vendors and just open up a bill. So we're going to imagine that we received these bills from our vendor. Let's say it was Verizon. I'm just going to make a new vendor just so we can see how that might happen. So this is a new vendor. We're going to add it, so I can add it on the fly, meaning as we go, adding it. So there it is. Notice if I add a vendor, we'll talk more about this later, you might want to enter all this information, but you don't really need to for a lot of vendors, like the telephone company. I might not need a whole lot of detail. If they are a vendor that I buy inventory from, it's likely that I want more detail for my contact information. We'll talk more about adding vendors in the second half of the course, noting that if you're I'm going to save this, working at a company or taking over the bookkeeping system, you shouldn't be adding too many vendors, because if the business has already been doing business, then the transactions should be somewhat cyclical. It's only when you do something new that you add a vendor. I'm adding a vendor here just so you can kind of see the process. Now the terms, you could put the terms, but they're not as relevant as on the invoice, because basically this is going to tell us when the due date is, meaning is it net 10, net 15 from the date we enter the bill. Now it's not going to be automatic is the problem with the bill, because it's going to be whatever the terms are from the invoice or the bill that we got from, like in this case, the telephone company. So we might have to actually enter the due date. So I'm going to say, so let's put it in the books at 1/1/2025, and let's say it's due on 01/15/25. I put 25, let's put 01/15 is what I said. All right, and then if there's a bill number, we can add the bill number. That helps just for reference sake. And then we have tags. We have a whole nother course or section on tags, which is a sorting kind of system that we can talk about at another time. Let's first not do an item, but rather do a category. And I'm going to put it into the category of telephone. Now, they might have it. So here we have telephone. It's a sub account of the utilities. All right, let's keep it there. We could put a description if we need to. We could say that the amount is going to be, let's say, 75 again. Now, this billable thing, this is only going to be there if you turn on the item to make it billable. Why would you make something billable? Well, if you're in a job cost system, then, for example, you might say, I'm using the telephone bill, or I might have supplies or something that I'm purchasing that I'm then going to add as part of my invoicing process when I invoice a customer. So if I have a job that I put together for a customer, I might then try to come up with the bill and say, hey, look, this is what I'm going to do. I'm going to buy the supplies. I'm going to pay what I need to pay for, and then I'm going to do a markup of 30% because that's my That's how much I generate from the job, and that's how I'm going to make it as transparent as possible. So when I buy stuff for a particular job, I can then make it billable and assign a tax or not, and then assign it to a particular customer. Let's just make a new customer, customer number 1. And I'll just generically put customer number 1 in here. I'm going to say save. Now, you would only do this, again, if you're going to bill the customer. This bit over here isn't going to do anything for the financial statements that we're going to record, but it will then pull this information into the customer information so I can turn around and create an invoice. We'll talk more about that later. I just kind of want to touch on that right now. So that's basically it. So I have the option to print it, make reoccurring and so forth. Drop down here. I can save and new or save and close. Let's go ahead and save and close it. So we're going to save and close it. Then I can go into my balance sheet. I'm going to refresh it. I have to run it to get the numbers to be refreshed. And then I'm going to go down to the accounts payable. This time I'm going to click on the 2025 numbers because we entered this in 2025 to deconstruct what happened. There's our bill. It's in there as a bill type form. Verizon, accounts payable, telephone. This tells us the other account. There's always at least 2 accounts that are affected in a double entry accounting system. As we saw in the Excel, there's the amount. I can click on any of these items, which will actually drill down to the source document, which is, of course, the bill. So here's our bill, and so that is great. All right, so let's close this back out, and let's go back to our report here. And then I'm going to go to the income statement or profit and loss from the tab to the right, run it to refresh it. Now here, because these are temporary accounts, it's all I'm going to see in 2025 because it's the only thing we've entered in 2025, making it a little bit easier. There it is under utilities, telephone, 75. It brought net income down just like we suspected it would. We're going to go into it, and then there's our bill once again, and the transaction detail. I can go into that, and that's going to give us our bill. So great. Going to close that back out. Back to our report, and that's basically the transaction. Back to the balance sheet. We have the added problem on the balance sheet now of tying out to this number. I need the subledger to tie out to this number, breaking out the information by vendor so I can see who to pay. We'll talk more about this later, but let's just touch in on it now. If I go to the first tab, where can I find that information? It's in what I would call the vendor center or the expenses over here. And again, we'll get into this a little bit more possibly later, but you will recall we have the tabs up top. I could go into the expenses tab and sort and say I'm going to sort by my bills. And then here I have my bills. I could then further filter it for the last 12 months or just 2025. And I'm going to say, okay, there it is. And there's my Verizon bill right there. We can schedule a payment, mark as paid, copy it if we want, and so on and so forth. Most likely, we're going to just go to the bills tab up top, which is basically just designed specifically for the bills items, into the unpaid area. And then once again, I can sort this with the filters. And here we have it. And it's put the ones that are still due are up top, overdue items. There's my Verizon bill here. I can also look at it by vendors, and I could say, let's look at it by sorting by open bills. And then now this is going to give me all the vendors that have the open bill. And if I go into Verizon here, where you can see all the activity in Verizon, there's our open bill. We could schedule a payment. So we'll schedule the payment. We'll get into more of that in the future presentation, but there is that. Now, I just want to point out that if I go to the bills over here, all of these bills should total up the 1677.67 to what's on the balance sheet at 1677.67. That's in essence our subledger. You can actually run a report for the subledger as well, but it's pretty neat that this totals it up for you right there. So that should tie out the report. If I hit the hamburger and go into the reports on the left-hand side, there it is, Donde. And then I'm going to close up the ham boogie for now. And we're going to go into business over, favorites, who owes you, sales and customers, what you owe. So you got the accounts payable aging, the accounts payable aging detail. Let's open up that one. Well, the most generic one will be bills applied, bills, the vendor balance. Let's just look at the vendor balance summary for now. Let's look at the detail. Sorry. Let's look at the vendor balance detail. This is like a classic subledger. So you probably don't use this one as much because you probably would use the aging one more or use the internal center over here, but just to see what a classic kind of subledger type report would look like. So we're going to do this. And so here is our subledger, and there's Verizon that has our bill in it. And again, this is just breaking out all of the ones that we owe. The point is that the total of the 1,677.67 ties out to what is over here, 1,677.67. The QuickBooks kind of forces that to happen because they don't let us enter anything into the system to accounts payable without a vendor, which kind of causes problems sometimes, but it keeps the subledger in balance, which is great. Other software might not do that. And if you encounter a subledger that doesn't tie out to the accounts payable, you have a problem, right? There's something that's been messed up, typically, is the thing. Okay, so let's go back to the first tab. Just to note that billable item would only be there if you had the bill items on, which is in the cog under accounting and settings, just to show you this. And then it's under expenses, and then it's under bills and expenses. And it's got this turned on to have billable items. This is not turned on by default. So the practice problem turned it on because it was a job cost system. So if I close this back out, we'll talk about more of that later. But just note, if I go into a bill, that is what this field is doing. That's where these two fields came from, the billable and tax item. And that basically means that if I went into customers on the sales side, and I went into, say, the customer, and then I'm gonna look for that customer that has the unbilled income. Let's sort by unbilled income, and there's customer number 1, which you can see has that $75 that we can pull over into an invoice, right? So we would use this to create an invoice from these billable items. So that's why that billable thing is there. We'll talk more about that later. I just want to point it out because it's part of the bill form. All right, so let's close this out. And do you want to leave without saving it? I do. And then let's hit the plus button. And I'm going to make another bill form. And just note that I can make a bill. Let's make this for I'm going to get generic vendor 1 tab. I'm just going to add a generic vendor, and I'm going to say that it's going to be on, let's make it 1/2, and the due date, let's say, is 1/19/25. Now note, I just want to point that if I go down to the items, if I buy an inventory item, I would have to be down here. Let's just check that out real quick. So let's make a new item. So I'm going to create an inventory item. Notice I'm not putting an account of inventory. I'm creating an inventory item. Let's put a 1 that will make the account. So and I'll talk more about inventory items later, but just to get an idea, inventory items, this would be the number of the item. You can put them in categories if you wanted to categorize your item. Initial quantity on hand, I'm just going to put 0. Date, as of date, I'm just going to put a date in there so it lets me go. Reorder point, let's reorder when we're down to, let's just say 0. Inventory asset. So it's going to increase the inventory asset account. Here's where it's assigning the account from the item. So I gave it an item that's going to assign the account. Let's put 1. It doesn't like the 0 up top. And then the sales price, let's put 100. And then when we sell it, we're going to sell it to sale of products. Notice we're not selling it here, we're purchasing it. But we're going to purchase it and then sell it, and this will be the amount that we sell it for, would be the item. Sales tax, if we have to deal with that, we'll talk more about that on the invoicing side of things. Purchase description, I'm just going to call the description, what did I call it? Inventory item 1. I'm going to copy that, inventory item 1. And then the cost, let's say we buy it for $60. So we buy them for $60. That's what's going to populate here on the bill. We sell them for $100. And then we're going to say the vendor is going to be just vendor, what did I say? Vendor 1 is the default vendor. All right, let's save it. And so now we have this item here that we're purchasing an inventory item, which is going to track this information on the subledger of inventory. So what's this going to do? It's a bill form. It's going to increase the accounts payable because it's a bill form. The other side is going to go to inventory because it's an inventory item instead of an expense. So it's going into an asset instead of an expense. And it's going to impact the subledger for the accounts payable, breaking out the subledger by who we owe the money to, vendor 1. And it's going to have a subledger for the what we purchased, the inventory item, tracking the inventory, not just by dollar amount, but by unit of inventory, because we're using a perpetual inventory system here. All right, let's save and close it. We're going to say save and close and check that out. Let's go to the balance sheet and then scroll up and say we're going to run the report again. Go down to here's our accounts payable. I'm going to go into the 2025, drill down on the number. There it is, our bill, vendor 2, $60. Other side is going to inventory. That looks right. Let's go into it. And so there it is. There's our bill. Let's close that back out. I'm going to go back up top to our report. And then the other side is not on the income statement, which isn't impacted at all. It's over here on the inventory. So I'm going to go into the 716 in the inventory. And so now we have the 716 inventory item detail. This was the starting value. And then here's our bill that we entered in. All right, let's close that out or go back. And then if I go back to the first tab and if I go into my expenses, let's look at my bills here. Into my bills, we can see then that now we have the one that we owed a vendor 1 for $60, which we can also see in the vendors. If I look at open bills, we see that we have open bills for vendor 1, and then within vendor 1, we have that bill there. Okay, so that's great. If I go to the bills, the total bills, and look at the total down here, we're at $1,737.67. That should tie out to what's on the accounts payable under bills, under accounts payable, $1,737.67. And we should have a subledger for now inventory, tracking inventory by item. So let's go to the first tab. Let's go to the reports on the left-hand side. And I'm just going to type in inventory. Let's just open up the inventory valuation summary. I'll just open that up. And so there we have it as of 12/31. Let's make it 12/31/25. So this now is giving us the asset value of the inventory, 656.25. Is that what's on the balance sheet for inventory? It's at 716K peso. I didn't rerun it. Let's run it. It's at 12. It won't let me do the future date is the problem. So I have to make it 01/31/25. It won't let me run the future date. That's annoying. Let's make it on 12/31/24. All right, there it did. It did it for 12/31/25. It's just that the run button is faded out here. I don't know why exactly that, but there it is. It's at the 716.25. So if I go to the balance sheet, we're at the 716.25, and this will break it out by the actual items that we have. So we have a pump, we've got this rock thing, and this was our new item that we put down here. So that's going to be the the process. I think, oh, I said I put one on, there was one on the books to start with. That's why there's two, because I recorded two. I won't get into that now. That's the general idea. All right, let's go back up top. And if I go back into the bill one more time, let's go into the bill one more time. So now we've entered a bill for an expense up top where we assign the category. We enter the bill for an item where we have inventory items. I just want to also point out one other thing when we put the category up top. When we buy something with a bill, the old system in desktop used to call this like the expense category, which is a little confusing because as we saw, we could use the bill to buy expenses, utility bills, expense, and telephone expense. We might use the bill form to pay for something that we have to put on the books as an asset though, like property, plant, and equipment. So just note that you might use that form using this category for an asset account of property, plant, and equipment. That's one of the things we have to kind of keep in mind on the bookkeeping side because if the dollar amount is fairly high, that might be one indication to tell us that we can't just expense it, which would be the easy thing to do, but put it on the books as an asset of property, plant, and equipment. And then we might buy inventory. And if we're tracking the inventory within the QuickBooks system on a perpetual inventory method, meaning tracking the units of inventory as we buy them and sell them, buying them with bill forms and expense forms, selling them with invoices and sales receipts, then we have to have the items so that we can properly track that. Now, we might not always be doing that. You might have inventory and you're tracking it outside of QuickBooks in Excel or on an external website, such as the Shopify website or something like that, in which case you would just still enter it up here as a category expense to inventory whenever you deal with inventory, and then you're going to adjust it periodically instead of tracking the inventory within the system. That also means that QuickBooks does not force you to have a subledger for inventory that ties out to the general ledger as they do with the accounts payable. Therefore, it's very easy to get the subledger that doesn't match the general ledger with inventory. And if that happens, you got to be careful of that. Something went wrong and you got to kind of fix it. All right, so that's the general item of a bill. Next time, of course, we'll do the next natural thing, sorting the bills that are due in the expense area, and then use the pay bill form to pay down the bill. The pay bill form basically being a type of check form, but a special one that always decreases the accounts payable.